Let me get some breaking news here. Steve Liesman's got this. Steve?
Carl, thanks very much. John Williams, New York Fed president, speaking about recent action in the repo market. The overnight market says that moves in the funding market were, quote, outside of recent experience. Kind of another way of the Fed president saying that they were a little surprised by what happens. They were prepared to supply liquidity, and we happen to know from our own reporting that they were indeed in a state of heightened monitoring of the markets on that Friday. The trouble, they said, was that markets were not distributing liquidity effectively. Translation, there was enough stuff around, it just wasn't getting to where it needed to go in the right way. So the Fed came in, and they say he says the repo operations did reduce the market strains. But we're not out of the woods yet, Williams says. There are potential strains in the funding market coming at the end of the quarter. That's why the Fed this week will do 3 two-week operations that will tide over the market over the quarter end. And the Fed will continue to monitor and analyze the markets closely and assess whether, among other things, to resume growth in reserves. Carl, from our own reporting, New York Fed officials also saying one of the areas they're looking at is why didn't the banks step up? They knew there was a potential cash squeeze coming on that Monday. They expected, they saw that the levels of reserves in the system, the level of liquidity was ample in the banks, but the banks didn't step in as they expected. So that's one of the things they're analyzing to understand why they had this crunch where a rate that should trade around 2%, for a while they're traded above 7%. Carl?
Steve, rates are fairly well behaved this morning.
Yes.
Are we back? Is it fair to say we are back to normal for now?
You know, I wouldn't give an all clear just yet. They offered up to 75 today. The banking system took down just 65. That is a good sign. We put a couple of these together. The question becomes, why is there so far a continued need for liquidity? Why the Fed has to keep injecting this money? By the way, the money's not cumulative, Carl. It's not 65, 65, 65, or 75. Yep. It rolls over on a night, and so it ends up being just a net of 75. But we don't quite understand why this money is continuously needed. A lot of talk and assurance that this is not a credit crunch like the financial crisis time. This is something different. More technical.
All right, Steve. Well, we're not done talking about it. Not by a long shot. Steve, thank you for that.